Excellent. Okay. I mean, quite easy stuff, but we're doing it for the benefit of those who are new as well. Let's go into pips, lot sizes, time frames, and trading journal. All right. So when we're talking about pips in the village or in this domain, we celebrate people who have made dollar amounts, but we don't measure success based on how much you've made in dollars. We focus on the amount of pips made. And this is where I guess Africa has been put on the map when it comes to pip making, because we were fed the lie that you need a big account size to be able to make money. So what they will do is they'll maybe have $10,000 because that's what they have floating around. They'll enter a trade, make 3 pips, but their amount that they received was $500. And everyone's like, wow, I need to sign up with you. So we've kind of like debunked that theory that you need to, be in short and make a lot of money. Here, because the economic system isn't the same, we can't afford to take the same risks that other people have the liberty of taking. So we have made a very, very big premium and placed a big value on pips. And what are pips generally? All right. I don't want to go too far into the technicalities, but it's the amount of points that you accumulate that turns into money. Okay, the amount of points that you accumulate that turns into money. So let me break this down so you understand how pips work. Then you'll understand how it works into dollars. Then you're going to get my mandate as to how many pips everybody should be making as a beginner in the Smurf village. All right. So 0.0000. Now in school, we worked on the power of tens, right? And we normally have a whole number, and then we have a decimal place, and then we have decimal numbers, and they work in like mini values. And so what you would know is that when you are transacting, you normally work to 2 decimal places. So if a bottle of water is $1.50 or 1 cedi 50 pesos, it will be 1.50. You don't see the other units that are attached, okay? In the stock market, most of them still work with 2 decimal places. And though it is good, you don't see how the other numbers are turning to make this number here turn from 0 to 1. And that is why when you're trading stocks, it's a lot slower, because 1 cent might mean a lot, but it will take a long time for 0 to turn into 1 cent. So with Forex, what they've been able to do is introduce more numbers so you can make money from the smallest increment of the value. And we call them points. And as they move up from points, 10 points equals 1 pip. So when you are calculating pips, we are looking at how many pips have you made, then we can translate into dollars. Most people make the mistake of, I need to make dollars, so this is how many pips I need to make. And when you follow that approach, you're going to lose money a lot. So never, ever, ever have a dollar amount as a goal. Because when you have a dollar amount as a goal and you don't reach that goal, you're going to compromise your values and your standards to get that goal, and you might lose everything. So this is how it works. If you remember the power of tens, we jump from 1 to 10 to hundreds to thousands. We are now doing that in reverse when it comes to these decimal places. So this is thousands going into hundreds, going into tens, going into ones. And then there is a fifth number, which we won't go into. But this fifth number represents this thing I call points. So when numbers start turning, it goes from 1, 2, 3, 4, 5, 6, 7, 8, 9. When it gets to 9, it now has the ability to turn the next number up by 1. So then it goes to 1, 2, 3, 4, 5, 6, 7, 8, 9. After it gets from 9 going back to 0, this number now turns to 2. So when this number turns to 9 and it finally turns, this number turns, this number turns, this one now turns at 1. Okay, so those are the mini numbers that are causing the big numbers to start rolling. So this is the thousands, this is the hundreds, this is the tens, this is the ones, and this is the number that causes all these other numbers to start rotating. The fourth number, all right, placed is the pip. So the decimal point is here, 1, 2, 3, 4. The rules change slightly when it comes to Japanese yen pairs, which we'll go through at another time. But let's focus on the general rule of thumb. The fourth number after the decimal place is the pip, and its value is 1. So if you make 1 pip, then you'll be able to know how much that will be in dollars or in cents. Okay, now we're going to the next number over. We are timesing that by 10. So we're going from 1 times 10. That equals 10. We're talking about the power of tens, remember. All right, so then we're going to the next column. You're going 10 times 10, which is 100. Then the final number is 1,000. So this is how pips ought to work. But you can't do pips without understanding how we use the instrument called lot sizes to help you understand how much money that you're going to make. But when we're talking about pips, this is how we're breaking it down. Okay? If this number moves by 1, it means that you've made 1 pip. Okay? If this number over here moves by 5, it now turns from 5 times 10 equals 50 pips. We'll go through it again very soon. The next number over here, if it is 7, it means that we're doing 7 times 100 equals 700 pips. So let me write down the values in, because this one was 5. Say 9751. So I've made this easier by giving numbers underneath each of these categories. So what we're doing here is 1 times 1 equals 1. That is 1 pip. 5 times 10 equals 50 pips. But because there's already a 1, it will be 5 times 10 plus 1 times 1. That would equal 51. Now this number has turned to 7. 7 times 100 is 700 plus, open bracket, 5 times 10, close bracket, plus, open bracket, 1 times 1, close bracket, 751 pips. Same thing over in the thousands area. 9 times 1,000 is 9,000, close bracket, times, open bracket, 7 times 100, close bracket, plus, open bracket, 5 times 10, close bracket, plus, open bracket, 1 times 1. So it will be 9,751 pips. That is how we're able to do pips. So when you're looking at a currency pair, and let's say Euro USD, for example, has popped up, and you've gone from 1.1050, okay, and the next number is 1.1100. When you want to know how many pips you have made, you want to look at the difference between the numbers. What happened here that turned this number into 1.11? This number went up by 5. So you need to see which column is it in. It's in ones, no, it's in the tens column. So what happened here? It went up 5 times 10, 50. It went up 50 pips to be able to turn this number into 1. So when you're talking about how many pips you've made a total of 50 pips. Type in a Y or a yes if you're with me. Okay, let's keep going. So that is the general gist of pips. But you cannot do pips in isolation without knowing how much money you're going to make. So the understanding of pips gives you the knowledge of how much money you are going to make and give you the appropriate measures of the risk you're willing to take. And that measurement is called a lot size, a contractual lot. And that is made as a deal or a contract between yourself and the broker. And we're going to talk about the broker in a later chapter, about the broker's role and knowing the roles of a broker and how to know if your money has been traded on the market or the broker has taken your money and has given a mirage that your money is in the marketplace. So we'll go through all of those things later on. So we have a contract between yourself and the broker to allow you to trade on the market, and we call them lot sizes, and we generally have three categories, and we're going to start them off with the smallest one that everybody at the beginner level should be trading, and that is a micro lot, which is starting from 0.01, which is the smallest you can trade, to 0.09. So anything that is at the final number after the decimal place, that is micro lot territory. This pretty much means that every pip is worth either 10 cents. Oops, sorry. So 10 cents per pip or 90 cents per pip. So when you're trading the micro lot, what this means is when you get your pip, its value is now either 0.01, which equates to 10 cents per pip. It either means you can lose 10 cents per pip or you can gain 10 cents per pip, or you are making, if it's the highest point in the micro lot territory, okay, it is 90 cents per pip. So that is micro lot. So if you're making 10 pips and you're at 0.01, how much would that be in dollars? 10 pips with 0.01, how much would that be when we're translating that to money? There you go. So the simple mathematics is if you went up 10 pips, all right, and those 10 pips at 10 cents, you just did 10 cents times 10, that would give you $1. Okay. Over here, 90 cents times 10 equals $9. So that is how you want to be able to measure there. So the next category is the mini lot category. And that starts at 0.10 going all the way to 0.99. That's all mini lots, which means from here, you are either making as little as $1 per pip or $9.99 or $9.90 per pip. So a lot of people who are here are now looking at this and saying, well, I would never trade a micro lot because there's less money there. Let me tell you, most people can't afford the last category. The majority of people lose their money in this category. People get caught up because they see money's coming in quickly, but the majority of people blow their accounts in this category. So I'll be very careful when you are here. Generally, the rule of thumb is 0.01 per every $100 that you have. So if you want to trade a mini lot, you should be thinking about $1,000 before you entertain a mini lot. I would stay at micro lot all the way till I get to about $1,000, and then you can change up into levels. But don't entertain a mini lot when you have $50 or $100 or $200, thinking that you've seen a few of us flip accounts, so you're going to do the same thing. It's not done that way. Let's stick to the rules. Are we cool with that disclaimer? So, last category is the standard lot, where we all aspire to be. Standard lot is from 1.00. I can't even do the infinity sign, but I'm just going to do an arrow. Like anything that is on the left side of the decimal place is a standard lot. Oops, what's happened to my screen? Let me try and get rid of this mess here. Let me just move all this. Sorry, just give me a second, everybody. I don't know what happened to my screen. So, okay, standard lot, anything from 1.00 onwards, and that means it's yielding you a return of $10 per pip. It's tasty, it's lovely, but if you're not careful, you'll blow your account very, very quickly. And that is, if you have $10,000 in your account, you can trade this comfortably, $10 per pip onwards. All right. So this is the breakdown of how lot sizes are used in conjunction with pip counts. So you cannot say to me that, oh, I want to make $50 a day, but you're trading micro lots. It can happen, but it will be very, very difficult to do that. So what you need to do is be sensible with the lot size that you have and make sure it's in accordance with the account size that you have. 0.01 entry per $100 is the safest way to trade. If you do 0.01, 0.01, 0.01, thinking that you're doing 0.01, so you're doing the right thing, no, it's not. Because 0.01 plus 0.01 plus 0.01 is 0.03. Okay, simple mathematics. So what we're saying is one position of a 0.01 per $100. That is the safest way to trade. A lot of people, especially as beginners, will get this information and throw it out the window. And then when they get to VIX, they'll wonder, why is someone else's working and my thing isn't working? Because they've forgotten this sort of information. And many people are in the VIX class and university, but they are here. And they're saying that, now I see where I've gone wrong. Now I see what I'm doing wrong. It's always good to come back to basics to learn the important things. And beginners boot camp is normally, I think it's the hardest boot camp of all the boot camps. As you go up and as you grow up, it becomes easier and simpler to be able to get things across. So that is lot sizes. So now let's talk about pips. What is my expectation of you as a beginner for pips? Does anybody remember? Expectations for beginners. How many pips are you to make a week? Now, I do remember someone has to refresh my memory that I'm giving a grace period to beginners for a month to be able to learn the craft and make 300 pips a week. Now, for those who are new and don't know what pips mean, the average trader makes about 50 to 60 to maybe 90 pips a week at the end, net profit. Okay, if you are a trader and you're making 50 pips a week, they used to salute you. They used to clap for you because most traders are celebrating 5 pip wins, 3 pip wins, 15 pip wins. If you do a 20 pip win, you are amazing. We have thrashed all of that. And we are saying, or we said, that 300 pips a week is the minimum. But now it has changed. It's no longer 300 pips. The minimum a beginner should make in this village, which is turning into an empire, is 500 pips a week. That is the minimum I expect of you guys. 500, pips a week. It's a big task, I know, to ask for a beginner. But when you follow the strategies and the way of life of being a villager, you'll be able to know that 500 pips is actually nothing. Okay? Because if you're doing 0.01 times 500, it is $50. Or mini lot, $500. Or standard lot, $5,000. That's how we're starting to now do things. Is everybody cool with the new minimum requirement? You are not a student of mine if you cannot hit this target. Okay, it's a bit harsh. I'll plead with you to try and hit this target. 500 pips is not a big ask. That means everybody else's premium is now going up. Look, one of the highest records that have been made in a week when it comes to pips, I'm not sure if he's on this call, but I think his pip count was 18,000 in a single week. Let me see if he's in the lineup. I don't want to mention names unless he can say himself that I am he. But the highest, he's from Nigeria. He made 18,000 pips in a single week. All right. I don't really count my pips these days because I'm now believing that we're at a level where people know how to trade and we now show people's results. But if you want to know how much I've made in a single week, who remembers my record for a single week of trading? How many pips? Does anybody remember? It's documented, so it can't be a lie. The amount of pips I made in a single week was 42,700. It's 42,700. That's what it ended up being. And I closed the majority of the other ones in losses because I'm like, okay, I've made enough. And that was the week I turned in Zimbabwe $16 to 4,000 in a single week in Zimbabwe. I think it was Harare. Yeah, Harare, Zimbabwe. So when we're asking you to try and do 2% of that, it's not a big thing at all. I know you can do that. 500 pips a week when it comes to your trading. It can be done when we go on into our subsequent trainings. Now, let's talk about time frames. Linking back up to the candles. Every candle has what I call an expiry date of its open and close. Once it reaches that time, a new candle is going to form. And I don't need to even write it down now. I can just show you at the top here what the time frames are. So on TradingView, they have actually smaller time frames, but on MT4, it starts at 1 minute and then goes into 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, and 1 month. What does that mean? It means the interval that you choose to put this on will determine how long that candle will go for. So if you're saying that you're picking the 15-minute time frame, it means from the open of the candle to the close of the candle is 15 minutes. And you're able to deduce the information in that 15 minutes, whether value went up or value went down. I am not an advocate of small time frames. There's only one boot camp I actually teach small time frame trading, and that is in the honors program. That's where we actually go into 1 hour, 30 minute, and 15 minute. I don't encourage 1 hour time frame trading. I don't encourage 15-minute trading. I don't encourage 30-minute trading. And this is why. In Africa, particularly now through experience, electricity isn't so stable. So if you're going to be trading in a 15-minute time frame and every candle is 15 minutes and you're aiming for a few hundred pips and your phone turns off, you have no like control of what happens. Smaller time frames require smaller targets, require smaller results. The only time frame I advocate for is 4 hours only. You analyze in the 4 hour time frame, you enter in the 4 hour time frame, execute everything in the 4 hour time frame. Do not tell me that you're analyzing in the 4 hour time frame, but then you're going to execute in a smaller time frame. This is the reason why you lose. Stick to one time frame and one time frame alone. 4 hours. 4 hour time frames allow you to sleep because 2 4 hour candles equals 8 hours. 2 4 hour candles allow one night's sleep or one day at work or even being in traffic. And the general rule of thumb is that whatever time frame you trade, you should wait at least 3 times that time frame to see price going in your direction. So, example, 15-minute time frame. If you're crazy enough to start trading that, it means that you need to wait 3 times that amount to expect it to go in the direction you think it's going to go into. And that is if your analysis is correct. So that would mean you'd be waiting 45 minutes of time to see expected results. I am an advocate for H4 4 hour time frame. So if you're waiting 3 hours of that time frame, you're waiting 12 hours to see it going in your desired direction. This gives peace of mind. And this is why I go back to my saying that you need to spend less time on your charts. So if you enter, you have 1 hour to analyze all your trades, you enter, and you're now waiting 12 hours to see how you go. You now know why I say no more than 7 to 10 hours on your trades. You need to be able to live a life, need to be able to perhaps, if you want, work your job or own your business, which I'm an advocate for business ownership. You need to be able to create time to do all those other things, okay? Work is time consuming enough. So you need to free up your time. And Forex is not buying you money, it's buying you freedom of time. That's why we're doing this for. So if you're able to analyze and execute in the 4 hour time frame, then you know that within a 12-hour period, you should be waiting to see the expected direction. It doesn't always mean that it will take 12 hours. It can happen sooner or it can take longer, but that will give your mind the ease of not being able to check your phone every 2 to 3, 4, 5 hours. Okay? So if we're good with that, type in a 111 into the chat box. Are we good? Are we good? Are we good? Okay. So this has been a jam-packed session. And those who have done the beginners bootcamp before know that like we haven't even started yet. The extra bits that we have been able to add is adding like a solid foundation into our learning. So we're going to talk about one more thing and then we will wrap it up for today. I actually wanted to go through TradingView today, but that's going to take a lot of time. Or should I do it? Should I do TradingView and then go into the other things tomorrow? Let's do TradingView and we'll go into the other aspects tomorrow. Hold on.